In today's video, we're going to take a look at Tesla in more detail, specifically its post-earnings volatility, and if that's really giving us an opportunity to enter for a long side setup. To help us break down this analysis, I'll be using Fibonacci Levels. Those levels are derived using the Fibonacci Extensions tool, which is a free tool inside of thinkorswim. In case you would like to learn more around how to use this tool, be sure to check out our free Fibonacci tutorial series. It walks through how to create these levels yourself. Now for this video, I have 7 levels that I've drawn, and these 7 levels are using these 7 swings. Swing 1, 2, 3, 4, 5, which is the deepest swing, 6, and swing 7. We'll use these 7 swings to build a personality of what we think is likely to happen inside of Tesla. We'll use that to build a game plan for both day and swing trading Tesla. And for all Volatility Box members, we'll automate our swing trading entry so that thinkorswim can do some of the heavy lifting for us. Now let's start first with breaking down these levels and understanding what does Tesla sell-offs typically look like. Now from these 7 levels, we have 7 Fibonacci zones that appear on our chart. I find there to be 3 natural clusters. This is cluster 1, which represents a 30% sell-off inside of Tesla. This is cluster 2, which represents a 45% sell-off inside of Tesla. And this is cluster 3, which represents a 65% sell-off inside of Tesla. If you really want to count that 4th level, which was that deeper level that we looked at, this represents a nearly 80% sell-off inside of Tesla. So this gives us 4 ranges, 4 approximate zones where Tesla typically tends to exhaust when it has its sell-offs. 30%, 45%, 65%, and 80%. If we put some concrete price numbers to this, the 30% zone is right where price action's currently trading, near $180. 45% is closer to the 150 price mark, 65% is closer to the 100 level, and 80% is closer to the 50 level. So we have 50, 100, 150, and 180. Now 180 is exactly where price is currently trading at, or at least pretty dang close to it. We're at 183.25. So this begs the question, do we want to start looking at a longer term entry? How do we know that, hey, this sell-off here is likely to exhaust and we're not likely to go down to, say, cluster 2? That's the question I'm looking to answer for our swing trading entry. For our day trading entry, we're simply looking to take advantage of this volatility as it's in its increasing period and take advantage of all of the ebbs and flows that take place in between. So let's start with our volatility entry first. For our volatility entry, I'd be using something like a 1-minute time frame chart for a stock like Tesla, maybe a 2-minute once you get into next week's activity, but a 1-minute has really been necessary for the volatility you see. And here, if we look at 2 days of activity, you'll notice how that volatility has changed post-earnings. I have our conservative volatility box models loaded on and the edge signals indicator. And here you'll notice how during the actual earnings period, that volatility is expanding. Now, price action starting to move in slightly more systematic manners. And by the next day after earnings, you'll notice that now our models are being respected much more. We see price sell off into our models. We see the edge signal confirmation tell us you're officially in oversold territory. And you see the rally inside of Tesla. It's not clean, but again, same idea. You see price breach our models. You see the bearish edge signal confirmations telling you you're officially in overbought territory. And you're looking to play the move to the other side. It allows you to take advantage of this ping-ponging back and forth in this post-earnings volatility. Now, if we do get overlaps with our Fibonacci clusters, that's where a really nice swing trading setup forms with a nice confluence. And speaking of swing trading, if we come back to our daily time frame now, and we take a look at the same 7 swings that I had drawn, but now we use the edge signals indication as our confirmation for, hey, we're officially in oversold territory, you'll find that the edge signals does a really nice job on the daily time frame of giving you that indication inside of Tesla, giving you the green light that, hey, we expect price to find some buyers here. Take a look at this first swing. You had 4 sets of the oversold signals, the first move up, and then you had the second set, the second move up with that bounce into support. Our next swing, same idea. You can see the edge signal here, move up. Next swing, edge signals, move up. Same idea, next swing, edge signal, move up. Same idea for our next swing as well, and the subsequent swings in our previous year. The edge signal has been a good indication that you're officially now in oversold territory. For Volatility Box members, there's a simple way that we can help automate this entire process for a swing trading entry instead of sitting here and waiting and watching for the edge signal confirmation. We can use Thinkorswim's automated entry conditions to do exactly that. I'll right-click, select Buy Custom, and there I'm going to select with OCO Bracket. Now, if you've never tried the edge signals with automated trading, try this in paper money first, or use a really small quantity. Again, this is a nice way to not have to sit there and wait and watch for this condition to be true. Instead, let Thinkorswim do the heavy lifting for you, and you can evaluate the charts further after you've automatically been filled into a starting position. So use whatever you'd like, whatever you feel comfortable with. Next, we'll configure the buy side order. I'll click the settings icon, and that pulls up our order rules panel. And here, I'm going to select symbol underneath conditions, which autofills to Tesla. Underneath method, I'll select study, and there I'll select edit. Navigate to the ThinkScript editor, and I'm going to remove all of the code that we have inside. Now again, you will need the edge signals indicator in your platform to follow along with this part. Here I'll write plot signal is equal to TI_edge signals. Close this out. Bullish trigger. We'd like to make sure that this is finished printing on the previous bar. Trigger if this condition is true. Our time frame is set to that daily time frame, and I'll click OK. Next, we'll link our limit to the bid price. Change whatever your quantity is to something you're comfortable with. I'm not having a cancel condition here, and I'll click Save. Now for our stop and limit orders, let's link this to the average price. And since this is Tesla, which I know moves a lot, I'm going to give this something fairly large just to account for any erratic swings. So plus or minus $10, one share, confirm and send, and Thinkorswim will automatically get us in when we have our first edge signal confirmation. And there you have it. We now have an automated trading order where Thinkorswim is automatically waiting for our first edge signal confirmation, our first sign that, hey, we're officially in oversold territory, we're looking at buyers to enter this market, and we're looking for whichever that level is to hold and for price to bounce from there. I hope you found today's video useful. Take care, everyone. Good luck trading, and I'll see you in our next update.